The world's central bankers, finance ministers, and development and private sector executives are gathered in the US Capitol to hash out solutions to global economic challenges. World Bank President David Malpass said there's a need to better address world debt. The World Bank is pushing for nations, including China as the biggest bilateral creditor, to agree to a new process for reworking loans for countries burdened with debt.
There was the G20 meetings that went into the evening last night, G7 meetings, and also, very importantly, the Development Committee of the World Bank. That's our governors, and there was strong endorsement of World Bank leadership and of the evolution process that's underway for the World Bank. So as we think big picture about what's going on, it's this slower world growth where the problems are magnified into developing countries.
Global debt relief efforts were started by the G20 group of nations in late 2020 with a mechanism known as the Common Framework. But there's been differences of opinion since then, leading to delays on how to treat debt. More than 70 low-income countries face a total of $326 billion in debt, with 15% of them already in debt distress, meaning they're unable to fulfill financial obligations and debt restructuring is required. IMF Managing Director Kristalina Georgieva said a breakthrough has been made on debt structuring, but that more talks are needed to work on timelines. The IMF has already warned this week of weakening global growth.
2.8% global growth is not enough to bring opportunities to businesses and people around the world. And most worrisome is the projection for weak growth over a longer period of time. Why is that projection? Because productivity has been lagging.
The IMF and World Bank say there are continued pressures from high inflation, the Russia-Ukraine conflict, and COVID-19 pandemic. The financial institutions in these meetings see the global growth outlook at 3% over the next 5 years. That's trending downwards from previous years. They want to see resilience and openness in global economies to make sure the situation doesn't get worse. Caroline Malone, CGTN, Washington.